Cash flow from operating activities. Statement will continue actually because I don't have sufficient space here. I've continued it here. Okay. Cash flow from operating activities, cash sales, collection from debtors, payments to creditors and cash purchases, payments to workers for wages, salaries, etc., payment of administration expenses, payment of selling and distribution expenses, these are all operating cash flows. Payment of tax on income, that is income tax. Net cash flow from operations. Net, this will tell you what is the net amount of cash generated or consumed in operations. Then similarly we find out the cash flows from investment activities, purchase of fixed assets outflow, purchase of investments outflow, sale proceeds of assets disposed inflow, sale proceeds of investments disposed inflow, interest on investments received inflow, dividends received. If you have purchased shares of other companies, you are going to receive dividends. Net cash flow from investment activity. Then cash flows from financing activities, proceeds from issue of shares for cash, proceeds from issue of debentures for cash, loans from banks borrowed, redemption of shares outflow, redemption of bonds, debentures outflow, repayment of loans outflow, dividends paid outflow, interest paid outflow. You get net cash flow from financing activity. Did you all note it down? Actually, you have to write it in one continuing statement. Statement should continue in your notebook. Now we have net cash flows from three activities in the outer column. Net cash flow from operations, net cash flow from investments, net cash flow from financing. You have to add those three numbers. You will get total amount of cash generated or total amount of cash consumed in the business operation. If it is negative, that means consumed. If it is positive, that means it is generated. Okay. Can I continue here? I'll continue now. Total cash generated or consumed. A plus B plus C. What is this A? What is this B? What is this C? Cash flow from operations, cash flow from investment, and cash flow from financing activity. You have to add these three numbers. You get the total amount of cash either generated or consumed. Add opening balance of cash and cash equivalents. Add opening balance of cash and cash equivalents. You will get closing balance of cash and cash equivalents. What do you mean by cash equivalents? No. Bank will come under the meaning cash. What do you mean by cash equivalents? Short-term, highly liquid investments where when you dispose the investments, you know how much amount you are going to get. There are no wide fluctuations in the value of those investments and they are highly liquid. Short term means the company has held those investments with the intention of disposing them off within 3 months from balance sheet date. On balance sheet date, company is holding some very short term investments which are highly liquid. That means there is a very active market for those investments. And you know that the values are not going to fluctuate widely and you are going to realize them within 3 months from the balance sheet date. Such investments will be considered as cash equivalents. If you have some foreign currency, that will also be shown as part of cash and cash equivalents. We have some advanced points also which we have to discuss, but not now. When the time comes, we should discuss. See, when we cook, we don't put all the masala at once in the beginning only. If you do, what will happen? Everyone will run out of the home. Because of the because of the smell it is going to generate. Gradually we have to keep adding masala. No, I'll assume it is included in operations. I'll assume it is included. If you want, you can add. I think if you want, you can add. I think. I'm not saying this is the final cash flow statement, boss. In a classroom, it is not possible for me to, we can say, imagine what are the various different types of cash flows which may occur in an organization. For every organization, their cash flows will be different. The items will be different. This is only a guide which will help you in classifying the cash flows. Is it clear? So according to situation, you have to decide which cash flow is what. Whether it is operation, whether it is financing, or whether it is investment activity. Investment. For a bank, yes, that is the difference. Okay. So, did you get that opening balance of cash and cash equivalents? You will add here. You will get closing balance of cash and cash equivalents. This is how we prepare a cash flow statement. Now, listen to me carefully. Cash flow from operations. How did we calculate cash flow from operations just now? We said cash sales, collection from debtors, payments to creditors and cash purchases, payment to workers for wages, salaries. One of our friends said, sir, what about production expenses? If you want, you can add that also. Payment of production expenses, administration expenses, selling and distribution expenses, and less payment of tax, we get net cash flow from operations. Is it clear? The approach which we have used in this statement is called as the direct approach. What's called as? So the cash flow from operations which we have calculated, it is calculated under direct method or direct approach. There is one more approach of calculating cash flow from operations which is called as the indirect approach. Okay, is it clear? So please write down that also. Take a fresh page, you write cash flows from operations, indirect method. Now actually, listen to me carefully. Actually, accounting standard 3 says cash flow from operations you have to calculate under indirect method. But as a student, if I teach you the indirect method first, you will start getting thousands of doubts like which you already got. Okay. So I should tell you the real, the normal way of preparing cash flow statement and then what is prescribed by the accounting standard and reconcile both of them. Write down. Cash flow from operations, indirect method. So now listen to me carefully. Only one part of the cash flow statement will change. Investment activity, financing activity, same. But cash flow from operations, to calculate it, there is an alternative method suggested by the institute. Actually, direct method is an alternative method. This is what is prescribed by the accounting standard. What is prescribed? Indirect method. Write down. Cash flow from operation activities, indirect method. Particulars, rupees. Can I have this now? Entire thing?
Yes,
Sir, will both methods give the same answer? Yes. There cannot be any change. Stop talking. Cash flow from operations, indirect method. Listen to me carefully. Particulars, rupees. Net profit before tax. Yard, non-cash, non-operating expenses, adjustments. That non-cash, non-operating expenses. What are non-cash, non-operating expenses? Depreciation. Now you have to be specific. Goodwill written off. Discount on issue written off. Preliminary expenses written off. Loss on sale of assets, comma, investments. Interest on debentures, comma, loans. So we are going to add some items. We will take net profit before tax. We are going to add back non-cash, non-operating expenses. Depreciation is non-cash. Goodwill written off is non-cash. Discount on issue written off non-cash. Preliminary expenses written off non-cash. Loss on sale of assets. Loss on sale of investments. It is a non-operating expense, or it's also non-cash. Interest on debentures and loans is a non-operating expense. It is cash but non-operating in nature. Hence it has to be added back. I'll continue here. Less non-cash, non-operating incomes. Non-cash, non-operating income. Interest on investments. Dividend on investments. Stop talking. Dividends on investments. Profit on sale of assets. Profit on sale of investments. Revaluation profits if included in P&L. Revaluation profits if included in profit and loss account. You will get operating profits before tax. Net profit before tax. Add back non-cash, non-operating expenses, subtract non-cash, non-operating incomes. See, revaluation profit is a non-cash income credited to the profit and loss account. All these items are non-operating incomes, hence they are subtracted from the profits. You will get operating profit before tax. say working capital changes. Working capital changes. Under working capital changes, can I show working capital changes here? Working capital changes. Decrease in stock, oblique, increase in stock, within brackets. Decrease in debtors and bills / increase decrease in prepaid expenses / increase decrease in creditors / increase decrease in outstanding expenses / increase. Now you will get cash flow from operations, cash flow from operations before tax, less tax paid, payment of tax, you will get net cash flow from operations. Now, working capital changes. Now, what is this gimmick? I think you will not understand. I will tell you later on. But I think at least this part you will understand. Decrease in stock without brackets, increase in stock within brackets. Within brackets means outflow. Decrease in stock without brackets means inflow. Decrease in stock is an inflow of cash. How? If stock has reduced, that means stock has been sold, money has been realized. Decrease in stock is a cash inflow, whereas increase in stock is a cash outflow. Why cash outflow? You have spent money to purchase stock. Hence, increase in stock is a cash outflow. Similarly, decrease in debtors or decrease in bills is a cash inflow. How? If debtors balance has reduced, that means you have sucked out the money from him, no? If debtors balance and bills receivable balance has increased, that means you have given him more loans. So you don't give cash as loan, you give goods as loan. For goods you spend money, no? So you have spent money on debtors. If there is increase, that means it is an outflow. Are you listening to me?
Yes, sir.
Then decrease in prepaid expenses. Prepaid expenses are reducing, that means you have liquidated them during the year. Increase in prepaid expenses, you already gave advance, now it is increasing further. That means you are paying more and more cash in advance. Outflow. So decrease means inflow without brackets. Increase in current assets means outflow within brackets. Clear? Then similarly current liabilities. Decrease in creditors. Creditors are reducing. Creditors are reducing. How will creditors reduce? Only when we make payment. When we make payment to creditor, creditor's balance is going to reduce. Decrease in creditor becomes an outflow. Increase in creditors. They are continuously giving goods which we are selling in the market and making it cash. So increase in creditors means we are getting more and more money as loan. So it's a cash inflow. Then decrease in outstanding expenses, that means you have paid off the outstanding expenses. Outflow. Increase in outstanding expenses means we are making people to work for you, but you are not paying any amount to them. You are always left with some cash. It becomes an inflow. Is it clear? You can remember one rule. Increase in current asset is a cash outflow. Decrease in current asset is a cash. Can I repeat? Increase in current asset is a cash outflow. Decrease in current asset is a cash inflow. What about increase in current liability? Cash inflow. Decrease in current liability? Cash outflow. Can you remember these points? Now, current asset minus current liability, what is it called as?
Working capital.
It is called as net working capital. Only current assets, gross, minus current liabilities, you get net working capital. Is it clear? Increase in working capital is a cash outflow. Decrease in working capital is a cash inflow. Do you remember? Do you understand this? If working capital is increasing, that means you have pumped in more and more money in working capital. That is a cash outflow. Decrease in working capital, you are realizing money out of working capital. That means it's a cash inflow. Is it clear? So increase in working capital is a cash outflow. Decrease in working capital is a cash inflow. Less payment of tax, ultimately you get cash flow from operations before tax. Less tax, you get net cash flow from operations. Now listen very carefully. Net cash flow from operations, indirect approach, and net cash flow from operations, direct approach, both are going to be one and the same. Write down that also in notebook. Net cash flow from operations, indirect method, net cash flow from operations, indirect method, net cash flow from operations, indirect method will be equal to net cash flow from operations, direct method. Reconcile. How will you reconcile?
Back. Reverse.
Will reconcile. Wait. Don't be in a hurry. Net cash flow from operations, direct method, and net cash flow from operations, indirect method, both should be one and the same. Now what I want you to do is, for next 10 minutes, please practice this once again now, before I start discussing the reconciliation. Okay? Start doing it.